Hello everyone, welcome to today's live US Open webinar. This is your host Nikos Tsabouras, Senior Market Specialist at FXCM. It's Thursday, December 1st, 14:20 GMT, 10 minutes before Wall Street opens. It's been an eventful couple of days with high impact economic releases and events, with the latest, of course, being the US PCE inflation figures, which came out less than an hour ago. Before, however, we go ahead and discuss about the developments and the technical outlook of certain products, please read carefully through the disclaimers and risk warnings, and then we'll get started. Once again, please read carefully the disclaimers and risk warnings, and we'll get the ball rolling. Okay, let's go ahead and start. We have a lot to talk about today. As we look on the Euro-USD hourly chart, let's talk over the recent developments, and we'll get into the technical outlook in the process. So let's start from yesterday, which was highlighted by Fed Chair Powell's speech, which sparked the US dollar sell-off and a rally in the bond and stock markets. The speech was largely a reiteration of things that we had already known and had already been discussed by Mr. Powell. He said that a smaller hike may come as soon as the December meeting, which is the part that markets actually focused on, and thus this reaction. However, once again, he said that the pace is not so important anymore. What matters more is the terminal rate, which he believes that it will likely be higher than previously expected, and that the Fed will likely need to keep rates at restrictive levels for quote unquote for some time. So markets once again focused on as we said, on the slower pace part. And this speech actually cemented expectation for a smaller hike in December, a 50 BPS hike. And also helpful to that was some jobs data yesterday, because we saw lower job vacancies in the US and lower private payrolls. Whereas Q3 GDP expanded by 2.9% according to the second reading. We're still in the preliminary figures. This was the second reading, which was higher than the first one. Now, today, nearly an hour ago, we had the latest inflation update in the form of the personal consumption expenditures, and the core PCE, the Fed's preferred inflation measure, eased to 5% year over year, as expected, from 5.3% prior. Headline PCE, the all-inclusive index, softened to 6% from 6.3% prior. This is the lowest level since the start of the year, since January, which was also 6%. Now, this played into yesterday's mood and gave another lift to Wall Street and pushes US dollar lower again. Meanwhile, Eurozone preliminary CPI inflation softened to 10%. Again, that's preliminary for November, whereas October CPI, final CPI was 10.6%. On other news, market participants continue to monitor the COVID-19 situation in China, and they're optimistic for an easing of lockdowns following recent protests. The truth is that there has been a shift in rhetoric and some changes as now authorities look to optimize those strict rules, but the changes have so far been on the margins. But in any case, prospects of a slower pace of hikes by the Fed and this optimism around China have led to a risk-on environment, which sends the US dollar lower and helps stock and bond markets. Now, that said, let's go ahead and move on to the technical outlook of Euro USD. You can see that it now pushes higher, tests 1.05, and this is the highlighted part is the reaction to the PCE inflation figures earlier, and that brings the common currency in a position to push for 1.0609 resistance, although we're still a little bit cautious for taking this level out and moving further on. The reason for this cautiousness at this stage is that the ECB may also be looking to slow down its tightening cycle, and there were some not very good figures from Eurozone this couple of days, and the pair has failed previously, you see here and here, at around the 1.05 level. So these failures create some caution, and we could see a return and another breach of the 200-day EMAs we highlight here, the 200 days EMA, although a stronger catalyst would be required for the 10.2 region around here to be challenged. Of course, we still expect more events such as the NFPs tomorrow that could again increase volatility and determine the next leg of the move. Let's move on to USD JPY. Which concluded its worst month since 1998 due to these reduced expectations around the Fed that we have seen over the last almost couple of months. And it extends its losses today to levels not seen since August. Now, bears tried to take out this key support here, the 200 days EMA at around 135.00, although further decline and a breach of 133.09 would need fresh impetus. At this stage, we see that it tries to find support above the key support area we mentioned, and the RSI is at oversold levels. So a correction higher towards the 100-hour EMA would be reasonable, but the upside seems well protected, especially from 140 and above. You can see here the descending trend line as well, and the daily Ichimoku cloud, the lower band. Now, I also want to move on to AUD USD, the Aussie, because we have the policy decision by the Reserve Bank of Australia on Tuesday before our next session on that day. And it's the time that now, as we talk, the Wall Street opens. But let's go first to AUD USD, and then we'll move. We'll progress into the US market as well. So let's bring the Aussie chart here. That's a 4-hour chart. So the Reserve Bank of Australia has raised rates to 2.85%, and the highest level since 2013 after 7 rate increases, but has adopted a less aggressive stance over the last 2 meetings with smaller 25 basis points hikes. However, it still expects more tightening, and Governor Lowe recently kept the door open to a return to bigger moves if necessary. Meanwhile, inflation is very high in Australia. Q3 CPI was at 7.3% and the highest in 30 years, while the central bank does not project a recession. So we'll be looking at that as well. Again, that's on Tuesday, to see how things will progress on the monetary front, on the monetary policy front. Now, the Aussie breaks first ground today after some indecision, let's say, and this allows it to target the 50% Fibonacci and the 06917 region here, but it's probably a bit early. It will need either a new catalyst or perhaps a pullback to find the room to push through 0.7. Now we see though that despite renewed boost, it still hasn't cleared this critical area here, and as such the pullback would not be unreasonable back towards 0.6586, 0.66 would be this region around here. However, daily closes below this level that would shift bias to the downside don't seem very easy at this stage, and once again the downside has multiple support levels, as you can see on the chart. Let's move on away from Forex and to US oil. So on Tuesday, we had talked for a push to 81.27, this region here that we're going to highlight now. Here, this materialized yesterday, and today finds first impetus and tries to take out the 200 period EMA. Now, this is mostly due to optimism around China and today's CPI PCE inflation report from the United States, while yesterday it didn't react much to the speech by Mr. Powell. Markets now prepare for the meeting of the Organization of the Petroleum Exporting Countries and Allies, the group known as OPEC+, to see if they will maintain their 2 million barrels per day production cut program or will adjust. The group has definitely shown readiness for deeper cuts if necessary. So we'll see how this will play out. Given this recent, let's say, resurgence that we see in oil prices, this may prevent it from deeper cuts. Meanwhile, the European Union tries to agree on a cap on Russian oil to be implemented next week. So we'll also see how this plays out. Now, on the technical front, we're not yet sure if we can have daily closes above the key EMA 200 period EMA that will open the door for further gains towards 88.96. Optimism around China and defense slowdown seems a bit stretched for now, and as long as US oil remains below the EMA 200, there is scope for further for renewed pressure. However, we would probably need to see a strong catalyst for the 76.23, 76.00 region to be challenged, and of course, if this would materialize, then the 200 weeks EMA here would come again into play. That's it from US oil, and let's round things off with Wall Street and the NAS 100, the tech-heavy index, which is also more sensitive to the rate talk. Now, yesterday it jumped nearly 2% after Chair Powell's speech. You can see this move here. And although it was down earlier in the day, it gets a fresh lift from the PCE inflation report, but again, it shows some indecision. Now, this is a critical area which it has rejected before, as you see. This is the 50% Fibonacci of this year's low, of this year drop, sorry. Now, the fact that it jumped yesterday definitely gives it the chance to extend its gains towards 12,014,468. But the next level at 12,883, 12,891 seems distant. But once again, given this failure at these levels earlier, this creates risk for a pullback towards the 200 period EMA, which is located at around 11,550, 11,449. But we would need a strong catalyst for a bigger decline that would put 11,100, 11,000 in the in question. But we can see that a pullback here would be reasonable, because we can also see that the RSI is at overbought levels. So that's it from the technical outlook. But again, we need to stress that we have key events tomorrow as well. And let's finish off with this. We have some PMIs imminent shortly at the top of the hour, PMIs from the United States. The main event is tomorrow with the US November employment report. Unemployment had risen to 3.7% in October, and jobs growth had slowed with the addition of 261K jobs. The labor market, however, is still tight as per the Fed. And as we talked at the start of our session, data from yesterday showed a decline in private payrolls and job vacancies. Now, of course, any Fed talk, any remaining Fed talk would be monitored, since this is the last week where we can have Fed speakers, because the communication blackout period kicks in over the weekend ahead of the mid-December decision. We also have the OPEC Plus meeting, as we said, on Sunday. We'll see if they will stick to their output plan or they will adjust. And next week, before our next session, we have the monetary policy decision on Tuesday from the Reserve Bank of Australia, as we already discussed. Now we will comment on the outcome of all those factors on our next session on Tuesday, 14:20 GMT, 10 minutes before the open of Wall Street. Until then, you can follow our analysis and commentary on the FXCM websites. So that's it from me. Thank you for joining, and we'll talk next week.